as we decided to simplify things for you in terms of stock picking, because you keep hearing about different types of stocks, maybe in the research reports, maybe on TV, that we, apart from the large cap, mid cap and small cap category, we do touch upon a lot of other categories of stock as well. So today we'll discuss and analyze the various type of stocks that are available in the market and their characteristics. And let me bring on board the man Ishmohit Arora, founder and teacher at SOIC, that is the School of Intrinsic Compounding, joining us live today. So Ishmohit, while there are various parameters on which the stocks are classified, could you start telling our viewers that what are the common parameters in which you classify these stocks? And a very good evening to you.
I thank you so much for the opportunity. And just before we start, I'll just give a standard disclaimer that there's nothing in this discussion will be a buy or sell recommendation, because like stocks can be basically classified into multiple categories, and purpose is to teach you about them. So broadly, I'll say ki you can classify businesses or stocks into 9 categories. So there's a very interesting classification given by Mr. Peter Lynch in his book One Upon Wall Street, and he has talked about stocks of being in 6 types, and we have added 3 more on top of it. So those 9 types are: first is there are stocks which are slow growers. So what are slow growing stocks? So basically these are companies whose growth rates are lesser than the GDP growth. If you look at the Indian GDP growth, it is somewhere between 6 to 7%, the real GDP growth. And these are companies who are growing their volumes at 2 to 3%. If you look at the lubricant sector over here in India, so you look at, so just as an example, if you look at a company like Castrol, right? So that segment is almost 99% penetrated. So it ends up becoming a slow growing business. So this is one category of stock that you can look at. So in this category, always look at the penetration rate of the category. Another example of a slow growing business or a category could be the toothpaste segment. So all of us basically brush our teeth, right? So all of us brush our teeth, and basically the penetration of toothpaste within India is more than 98-99%. So again, the growth rate falls to like 2-3% normal growth rate. So this is an example of a slow growing category. Second category of stocks are known as stalwart stocks. So what are stalwart stocks? Basically, these are businesses whose growth rates are plus minus 2-3% of the GDP point. So suppose stalwart stocks are, these are very established businesses, but their growth rates will always be between 10 to 12% types. So whenever you're looking at stocks, always try to recognize the growth rates of these businesses. So stalwarts, some example could be, so suppose if we look at something like a Hindustan Unilever, just as an example, so that is a stalwart stock because the growth rates are between 10 to 12% if you X out the decline in tax rate in 2019. And this is considered to be a stalwart stock because the category is established, it is the market leader, but the growth rate is between 10 to 12%. So this is an example of a stalwart stock. Then there are fast growing stocks. So these are fast growers. These are typically your businesses which are growing at a rate which is much faster than the GDP growth. So so you'll find such businesses growing at a rate of 15, 20, 25%. And there are multiple of such businesses around. So last decade, I'll just give you one example, right? So if you look at the business of Bajaj Finance, so it has always grown at some 25-30% in the past. And that throughout the last decade was an example of a fast grower. So there are multiple such companies available in India today. But whenever you're looking at stocks, always categorize in terms of growth rates. Then there are cyclical companies. Now, this is a very, very important concept for all the retail investors to understand. So in cyclical businesses, what ends up happening is that a lot of time your margins are very, very volatile. So if you look at the metal business, if you look at the sugar stocks, right? So these are some of the cyclical businesses. In 2018, we had a very good cycle of the graphite electrode stocks, right? You had a question now?
No, please go on.
So in 2017-18, we had a very good cycle of the graphite electrode stocks when the margins went from single digit to 30-40%. But a lot of retail investors got trapped because they weren't able to categorize into a cyclical category. To get the cycle right, always look at the margins of the last few years and keep asking yourself why the margins have all of a sudden expanded. Because when the margins fell from 35-40% back to like -2, -3, a lot of investors lost wealth because they didn't know how to categorize stocks into cyclicals. Then we have the last 2 categories according to Mr. Peter Lynch, that is turnaround and asset opportunities. So turnarounds are those businesses which have been loss making for a long period of time. Then because of change in the industry fortunes, they start reporting profits, or because of selling some non-core businesses, they start reporting profits. Then asset opportunities are those businesses which are trading at a valuation which is less than the replacement cost. So we have seen this theory playing out again and again in the cement sector when they're trading at a valuation which is less than the replacement cost. So these are asset opportunities. Last three type of stocks are, so one is the holding companies. So you'll find that out in India, there are a lot of holding companies that are listed. So holding companies are entities which own listed subsidiaries. These are the promoter of listed subsidiaries. They own the equity over there. But problem with holding companies and opportunities with holding companies are, first let's discuss the problem. These companies tend to trade at a discount. Now I'll just give you 2-3 examples. So suppose if there's a Bajaj Holdings, there's a Maharashtra Scooters, there's a Kama Holdings. So Kama Holdings is the promoter of SRF. And SRF's today market capitalization is close to 68,000 crores. Whereas Kama Holding trades at a market capitalization of 8,000 crores. And Kama Holding owns 50% of SRF. So according to Kama Holdings holding of SRF, ideally because the holding valuation is close to 34,000 crores because SRF's market cap is 68,000 crores. So Kama Holdings owns 50% of that. And today's Kama Holdings valuation is close to 34,000 crores. So, 8,000 crores. So there is a discount to the underlying holding of almost close to 75 to 80%. But generally, this discount is seen across holding companies because market treats them as if that the holding company will never sell the underlying asset. But sometimes these discounts do narrow. So an idea for retail investors is to check the holding company discount to the underlying holding over the last 5 to 10 years and then look at the points where the discount has been maximum and how the discount got converged. So this is also one way to look at holding companies. Kama Holdings, we discussed about Bajaj Holdings and Maharashtra Scooters. Bajaj Holdings will be a holding company of Bajaj Auto, Bajaj Finserv, even they hold Bajaj Finance and Maharashtra Scooters. Maharashtra Scooters also owns basically Bajaj Holdings, Bajaj Finserv, Bajaj Finance and Bajaj Auto. So these are some examples. Then eighth type of businesses that we have, or eighth type category of stocks that we have, these are known as conglomerates. So what are conglomerates? So conglomerates basically they own so conglomerates have a lot of businesses in them. So if you look at the example of ITC, you will find that ITC has many unrelated businesses within one entity. So one business that they have is that of the tobacco business, right? Then they have the FMCG business. Then they have the paper and boards business. Then they also have an IT business. Then they also have a hotel business. So this is also an example of a conglomerate where you have multiple such businesses within one entity. So generally, it has been seen in Indian context that conglomerates all over the world actually they trade at some discount to the underlying businesses. So in such businesses, when you value them, you have to use sum of the parts valuation. World's most famous conglomerate is Berkshire Hathaway, which is run by Mr. Warren Buffett, because Berkshire Hathaway has many underlying many underlying businesses. So that ends up becoming an example of a conglomerate. So in Indian context, even Reliance Industries is a conglomerate because Reliance Industries has a petrochemical business, a telecommunication business, and also they have multiple other lines of business, the retail business as well. So I think Reliance within itself might have more than 90 to 95 businesses. So these are examples of conglomerates. But coming to the last type of businesses, so these are basically businesses these are category of stocks where I just basically think about them that these are unique stocks or there's a scarcity premium attached to them. So basically, these are businesses where there is no competition exist in the listed space, right? So it is the only stock listed in that particular category. So one of the famous examples over here is the off-the-highway tire manufacturer by the name of Balkrishna Industries. So again, nothing is a buy-sell recommendation. We are just trying to understand what type of stocks are there.
No, absolutely. And Ishmohit, that was a detailed answer on different types of stocks that we have. But quickly, because we are short of time now, wanted to understand from you, what is your sense that 2022 belong to which category of stock, and going forward in 2023, which category of stock that one investor should be looking out for? Which are the ones that look the most lucrative to you, if you can help with this answer?
So what I basically think about it is I think 2022 belong to autos and financials. So these are like typically your examples of cyclicals and turnarounds. And I think given where we are in the credit cycle right now. So there is a possibility that a lot of financials, which are also like cyclical stocks, they might keep doing well. And Indian market has actually been always a market of fast growers. So we have seen a lot of businesses within the beverages category or some other categories where they've grown really fast and they've always been given a premium. So Indian market is a growth market. So that is that, like fast growers and cyclicals, if you're able to get a right mix of them, then you can identify a lot of opportunities within the Indian context.
Okay, but with this, Ishmohit, sorry we are out of time, but we wanted to take it more forward with the different types of stocks and what exactly to looking forward to. It maybe some other time onto the show. But with this, we let you go on that. Thank you so much for joining us today on ET Now and helping our viewers have this understanding, specifically what are the different types of stocks and which could be the outperformers in 2023. Great having you.